Hi folks, David Waring here again with InformedTrades.com and today's lesson of the day. In our last lesson we finished up our discussion on the most basic ways that futures traders enter the market with a look at the stop order. In today's lesson we're going to continue our free futures trading course with a look at the most basic ways that traders use to exit the market. So let's get started.
Okay, so if you haven't done so already, you're going to want to go ahead and hit the pause button here and click the link above this video where you can register for a free futures demo trading account so you can follow along with these lessons here as well. Okay, so now that we understand how to use the market order, the stop order, and the limit order to initiate a new position, we're going to look at how to close out an existing position using these orders. Okay, so to start off here, I'm going to go ahead and select 1 for the quantity here, and I'm going to go ahead and sell one S&P contract at the market. And as you can see, that's executed here at 8:18.25, and it's also indicated here with a -1, meaning that I'm short one contract. Okay, so to close this order, the simplest way is to simply click the flatten button here, which very basically executes a market order in the opposite direction to close you out of the position. Okay, so you can see that that position's been closed there when I hit the flatten button. Now, the good thing about the flatten button, and the reason why I recommend using this feature instead of simply executing an opposite market order, is because if you have orders that are tied to this position here in the market, then as you can see here, I've got an order placed there. When I click the flatten button, not only is the position canceled, but also the open order that was placed along with that position has also been closed. So that gets me out of all the trades, as well as cancels all of the open orders that go along with that position. Now, a second way that you can close an open position that actually initiates a new position in the opposite direction is to click the reverse button here. So let's say, for example, that you're trading a range and the market's you're short and the market's traded down to your target, and now you want to trade the range back up. You can simply click the reverse button, and that's going to close you out of the open position there, the short one lot in this example, and it's now entered me long one lot, okay, in the opposite direction. Okay, so two different ways to close positions using a market order there, and the second one which actually closes and opens a new position at the same time. Okay, now for stop and limit orders, as we looked at, we can use those to initiate new positions, but perhaps more commonly the stop and the limit order are used to protect against losses on an existing position and or to take profit when the market reaches a certain level. So let's say, for example, here that you generally place a stop loss 10 pips away from the market. If the market trades against you by 10 pips, then you want to take your loss there to protect your account, and you place your profit target 20 pips to the profit side of the market. Okay, so here you can select simple bracket from the drop down menu here, and then you can see here that I've selected, using the arrows here, 20 for my profit target and 10 for my stop loss, and by clicking the send bracket order button, I can go ahead and add that stop loss and take profit order to my existing position here. Okay, and the cool thing about doing it with a bracket order is that these orders are what are known as OCO, meaning that if the market trades against me by 10 pips, then I'm going to be taken out at the loss, and the take profit order that's also now tied to this open position will be canceled, so I don't have to worry about manually canceling that order. Okay, so in addition to adding a stop and a limit or a take profit to a existing position, you can also have the stop loss and take profit order sent along with the order that you're using to enter the market. Okay, so I'm going to go ahead and click the flatten button here, and as you notice here, it not only closes out my position but also the orders that were tied to it. And this time I'm going to click the auto checkbox here, put a check in there, and you'll notice this time I'm going to sell one at the market, and you'll see that not only has my position been executed, but I now have the protective orders to take profit at a certain level if it reaches 20 pips above, or sorry, below, since I'm short this time, or it's going to take me out at a profit, or if it trades against me by 10 pips, it's going to take me out at a loss. And if I click the center button here, it brings the market back to the center here, and you can see the other side of the order there as well. And again here, those are OCOs, so if one order is hit, then the other is going to be canceled. Okay, so you should now have a good understanding of the most basic methods that traders use to exit the market. As always, if there's any questions or comments, please feel free to leave them in the comment section below, and good luck with your trading.